Hello and welcome to The Marketplace with me, Luqman Hariz, a show where we search for the hidden gems of the Bursa Malaysia, which are the mid and small cap companies. But from time to time on the show, we like to pause, take a step back and reflect how the market has been, how the market is, and also project a few outlooks and what to expect moving forward. And on this episode, joining me to do just that is Affin Hwang Investment Bank Head of Retail Research, Datuk Dr Nazri Khan. Datuk, welcome to the show.
Yes.
First of all, let's start with the Bursa Malaysia, and we've been seeing foreign fund outflows for the past few weeks. We've had a very good first half, but since the second half, we are seeing more and more foreign fund outflows. Even a very positive Q2 results announced by Bank Negara did not really help with the foreign fund outflows. Why do you think this is?
First of all, we need to understand that this week we have seen an outflow of 382 million ringgit. To be honest, this withdrawal has tapered down, right? We're seeing amazing foreign fund inflow in the first half of this year. Despite these short-term withdrawals, the total cumulative fund is still a net buyer of 10 billion ringgit. Meaning the trend that we see right now, to me, is just a short-term temporary. The withdrawal that we see, this is just the same trend that we see with other countries as well, such as Indonesia, Thailand and Philippines. I don't think this is a lasting trend. In fact, what we see is just a positioning, stay aside by the foreign fund ahead of the Jackson Hole gathering that we see yesterday. I'm sure after the short-term holiday that we see, they will come back. Do
you think we'll ever replicate the good foreign fund inflows we've seen in the first half of this year?
Yes, why not? In fact, we need to take note that the ringgit has made one of the best performance in a few years' time. Ringgit has gained a total of 5%. If you look at Bursa KLCI as well, the year-to-date gain is the best gain that we made since 2013. This year, KLCI has gained roughly about 8%, and I think this trend is continue, which is going to be led by technology sectors as well as construction sectors.
I mean, the ringgit, of course, came under a lot of pressure since last year also. Exactly. It's been quite good for since the beginning of the year, as you've said. It appreciated, I think, about 3.1% in the second quarter. But do you think this is also compared to a low base we saw last year?
Yeah, we need to understand that last year, and this is different trends. Last year, we see a lot of political uncertainties. This year, we see a little bit of uncertainties, but we managed to sort it out, especially after Donald Trump became the president. And I'm sure going forward, his fiscal reform, tax reform is going to materialize, despite the controversial statement that he made that with the Congress, the firing of his communication chief, North Korea, US crisis and all this. But last week, Dow Jones hit all-time high, 22,200. Everybody was talking about the new bull market coming to the picture. And this week, we just see a temporary correction. I would say this is a blessing in disguise. We should use any temporary weakness that we see right now to buy on dips and start to accumulate ahead of a good quarters. Over the next few weeks.
We'll talk about the North Korean volatility soon after this, but it's interesting you mentioned tax reforms by US President Donald Trump.
Correct.
He has also made a lot of economic promises during the campaign trail, renegotiating NAFTA, imposing a 35% tariff on Mexican export and things like that. Do you think he will follow through on all those promises, especially economic promises?
Well, of course, politician, you don't take it as face value. Sometimes there's an agenda behind the statement. But what matters is what does the long-term investors are doing, especially people like Warren Buffett, people like Peter Lynch and all this. We know that they are heavily accumulating, especially technology stocks as well as consumer stocks. At the end of the day, we want to see what are the direction of Wall Street indexes and, of course, all the great ASEAN indexes. Today, we know Hang Seng has already broken 28,000. This is the first time Hang Seng break 28,000 in 2 years. And we see all trends around the world. Technology sector is leading all the way. When technology sectors leads, I believe that is a sign of a real bull appetite, risk appetite coming. We do not want to see defensive sectors taking the lead. So at this moment, we see, we see all signs pointing to a bigger bull at this moment. We have stronger currency momentum, ringgit momentum. We see, of course, election momentum. A lot of rumors the election is around the corner. I'm sure hot money is going to come anytime soon. We have great momentum in America. The only problem right now is, of course, Federal Reserve. Chairwoman Janet Yellen does not make a strong stance with regard to direction of interest rate. But that can also be another blessing in disguise because dollar will start to trend lower and commodities will start to go up.
But do you think Janet Yellen is probably just doing her job? I mean, of course, you know, being the chair of the Fed, you cannot be too strong with your language.
I'm not sure about that.
Real markets, right?
But we also see ECB chairman, President Mario Draghi, also take more or less the same stance. He does not talk about the direction of a euro interest rate, but he keeps talking about reforms, you know, and the free trade and all this. I believe what they are doing right now is they are waiting for the right times before they start to announce the tightening of the monetary policies. But anyway, I still think we have ringgit momentum at this moment, we have election momentum, and we have Bursa momentum. This should be the best time for us actually to start accumulating on great stocks, especially technology sectors.
All right, we'll come back with Affin Hwang Investment Bank Head of Retail Research, Datuk Dr Nazri Khan, when the marketplace returns. We'll be right back. Don't go anywhere. Welcome back to the marketplace with me, Luqman Hariz. I've been speaking to Affin Hwang Investment Bank Head of Retail Research, Datuk Dr Nazri Khan. Now, Datuk, we mentioned a lot of factors that's going to be the boon to for the ringgit and also the Bursa Malaysia for this year and also moving forward. But what about the exposures that we have? You mentioned before the break North Korean volatility. They are becoming more and more rogue, and of course this adds to the geopolitical risk which can influence the Bursa Malaysia and also the ringgit. How exposed are we to this?
Of course, Malaysia are not exposed directly, but we could be exposed indirectly towards China, especially in Japan. There might be some little bit of geopolitical tension in the short terms, which might affect trade between Japan, China, and the neighboring countries. But we need to learn this from the past developments. If you look at the past, most of the geopolitical tension only lasts about 1 month to 3 months. Right? After all this rhetoric, subsided, then the market start to gain, recovering in sentiment. The market hit all-time high. So I'm an optimist. I believe what we see right now, as long as all this tension is based on irrational threats, nuclear threats, I think over sometimes this is going to dwindle, and things will sort it out, and market will go back to all-time high.
I want to talk about the oil price, something that's also a big factor in the Malaysian economy. Yes, we've decreased our dependence on oil over the years, but still, it is, of course, undeniably a very important factor that contributes to the economy. Now, the cuts done by OPEC and then extensions to that cut has not had the desired effects, haven't it? Yeah,
so far we don't see that, but at least we see a strengthening of the price of oil. Today we can see that Brent crude oil has already broken $52 per barrel. It was 49 a couple of weeks ago. We also see that light crude oil also start to hit $50 per barrel. Obviously, we don't see the expected effect that we want, but at least you see some firmness in the price of oil. And I'm sure that the latest OPEC meeting, they have decided that they're going to make steeper cuts among all the members. We also see that the inventory of America, oil inventory of America, also start to trend down. The only problem is that these two stubborn countries that always go against OPEC, Libya and Nigeria. I think as long as we can ensure that they comply with these import cuts, as well as export cuts, then I think we can manage to solve it over the medium term.
Do you think they can get agreement from their member countries to increase their cuts?
Directly, it's hard for them to control, but they can use other ways, probably diplomatic ways or sanction, that kind of stuff, through the help of bigger countries. But I think again, OPEC remains OPEC. What matters is the supply and demand. We can see now, of course, thanks to the Hurricane Harvey that happened over the last few days, it really hit Texas, energy hubs and all this. I think we might see some strong support in the price of oil at $50 per barrel. Of course, what we want to see right now is all this pledge to cut their exports, being translated into actions.
If you can put a price on Brent, I know some economists are very apprehensive in doing this, but by the end of this year, where do you think it will be? Consensus
at this moment shows $60 per barrel. So I think we're probably going to $60 per barrel over the next few months. as long as we see recovery in the economy, especially Europe, right? Next is China. Both of these, if they recover, then we might see a slightly better consumption of oil.
And being a net importer of oil, how would that affect Malaysia?
At this moment, we are no longer exporters. We know, right? Net exporter. We are net importer, but we have done great rationalization of our economic base. We have diversified our base. So at this moment, we can see that the impact of price is not as great as what we see over the last few years. But again, it still constitutes about 20% of total base economy. But I hope with all the help from major oil player, we have gone up, to upstream instead of downstream, so that we can have a better, sensitivities from rising price of oil towards our economy.
And on that note, if you look at the Q2 results, again, you can see that exports helped a lot. Exports boosted the Q2 results, particularly E&E sector and also exports to China. Now, some critics are saying that this limits any possibilities in that we are very reliant on our exports going to China, and we're also overly reliant on one particular sector like E&E. So is the growth momentum sustainable in terms of GDP, at least for this year?
That's exactly what we see right now. Despite the price of oil going down, price of CPU going down, all right, our economy has made one of the best GDP growths of the last few quarters. In fact, it baffles most of the economists. This is the fastest growth that we see in 5 years. So I think the credit should go to the government. We have made sufficient diversification, and I think the price of oil, the softness in the price of oil, does not matter that much at this moment.
All right, thank you so much, Affin Hwang Investment Bank Head of Retail Research, Datuk Dr Nazri Khan. And that's it for this episode of The Marketplace. Send us all your feedback on all our social media platforms, Facebook, Twitter and Instagram at 501awani. As you can see, download our app available on Google Play and also the Apple App Store. And don't forget, you can also listen to this interview on your podcast. Simply search for Astro Awani or The Marketplace wherever you get your podcasts. Luqman Hariz, thanks for watching and have a nice day.